Hello and welcome to Rajya Sabha Television with me, Frank Pereira. India's GDP for the second quarter of FY17 grew at 7.3% versus 7.1% quarter-on-quarter and 7.6% year-on-year. The GDP data comes at a time when there are growing concerns that the demonetization decision of Prime Minister Modi's government may slow down the world's fastest growing economy in the coming quarters. Fitch Ratings has already lowered India's GDP growth forecast for this fiscal to 6.9% from 7.4%, saying there will be temporary disruptions to economic activity post-demonetization. On this edition of The Big Picture, we'll analyze the Q2 GDP numbers, what's in store for the coming quarters, and can the economy withstand the demonetization hit? Joining me on the program today are Renu, Kohli, former member, RBI and International Monetary Fund; Ajay, former Secretary, Ministry of Commerce and Industry; Haque, Bhattacharya, Editorial Director, Business Standard; and Tajamul, Haque, former Chairman, Commission for Agricultural Cost and Prices. Thank you so much for being with me on The Big Picture. Ms. Kohli, I'll start with you. I'll give the lady the first word on the program. 7.3%, if you look at the number in isolation, it looks good, but there are worrying signs, aren't there?
Yes, what the numbers do confirm, as the indications have been for some time, that this was primarily a one-legged economy with consumption as the sole driver. So the base of growth is none too narrow. And in that sense, the numbers are not very encouraging. And unfortunately, what has happened is that primarily that very driver which has got hit by the demonetization. But even if you're looking just as the GDP numbers in isolation, I mean, not forgetting about the monetization bit, what emerges is that 57% of it is coming from private consumption and government consumption. Now, the government consumption isn't sustainable. So the worry is that there is a three-quarter successive contraction in private investment. Net exports has contributed positively, but that's because imports have gone down, and that's a classic way in which India's aggregate demand behaves, because whenever there is a growth slowdown within, net exports turns positive, because non-gold, non-oil imports, which is the primary indicator of domestic demand, shows a weakening. So in that sense, the numbers are not very optimistic. Also, while they have been high, above 7%, they are marginally below what was expected in the consensus, which was about 7.5%.
Indeed. Investment and savings, Mr. Dua, are at a historical low. Demand is low again. So there are concerns all around. So how do we bring in growth? What should the strategy really be?
Frank, before I answer that, could I just talk about the GDP's Q2 figures,
yes,
which we talked about? I think 3 or 4 things in Q2 went off well for India. One was agriculture. We've recorded a 3.3% rate of growth in this quarter in agriculture. We've done fairly well in construction, 3.5%. Overall, the core sector, which constitutes about 30 or 7% of the industrial production, so steel, that cement, it includes electricity, etc. That did very well.
Yes.
I would also say that our kind of private consumption in that quarter actually is higher than in the previous quarter. Those are 3 or 4 things which are positive.
Indeed.
The question is, are we going to be able to sustain these? And what really brought down the figure from the expected 7.5 or 7.6 to 7.3? I think there, to my mind, our industrial figure, the overall industrial growth, which is manufacturing was low, construction, the quarrying, mining and quarrying was low, electricity was low. And all these 3 actually form the index of industrial production,
indeed,
which was minus 0.7%, 0.7% in this quarter, historic low.
Yes.
Services, which usually has been the driver in the economy, has grown, slowed down, and the growth was 8.6% or maybe 8.8%.
That's also because of the payouts of the 7th Pay Commission.
Absolutely. And when I talked about private consumption being higher, private consumption was largely because of the payout to the government staff and the pensioners, and that actually led to it. Can these be sustained now, and particularly in the light of the events of since November 8th.
Yes.
That's a cause, definitely a cause for concern, because I don't think the government expenditure, which in Q1 was rising, which was very much higher the whole of last year, actually Q2 has seen government expenditure lower than the government Q1 expenditure, and that gets also borne out by the fiscal deficit figures.
Indeed.
What
indeed.
was 82% at the end of September, in October is already down to 79%
Indeed.
of the other. So we have to be really concerned now with the impact of demonetization and look at it from 3 or 4 different criteria.
Sure,
Maybe
sure.
I'll talk about it once the others have.
Mr. Bhattacharya, how can we sustain this growth? Fitch has already, lowered the estimate to 6.9 from 7.4. There are some other ratings also which suggest that this number could be lowered again. So how do we sustain the growth?
Well, if you deconstruct the numbers, you will see that how the investment have not really kept pace with the overall trend. Actually, if you see the capital formation rate, actually has come down. It is down 29% compared to 32% a year ago. So you are seeing steady decline in the investment rate. And one way of reviving the GDP numbers would be to make sure that the investment rate picks up once again. Now, the problem there is that the private sector is anemic. It is incapable of bringing in the money that is required to kickstart the economy. And the government had, start of the year, had planned to pump in 70,000 crore more capex for the current year, out of which almost 55,000 crore have already been invested by front loading in the first half. So what you're going to see in the remaining next 2 quarters is actually a small portion of that 70,000 increase that was budgeted for.
Yes.
So private sector is not going to invest more, particularly because of the uncertain situation right now that stares them. And the government has already used up the bulk of its additional capex in the first half. So the scenario going forward in terms of a capex-led GDP revival is very unlikely. So the only way it can probably be rescued is by improving consumer sentiment so that people spend more money. But I don't see it's happening.
But why will the consumer do that, especially with the current situation?
And
yes.
there is a physical, the lack of ability to spend money is also going to be a major bottleneck.
Indeed.
So therefore, already the economy has slowed down if you compare it with quarter on quarter of the last year. So I don't see how the economy can pick up space in the going forward in the coming 2 quarters.
Indeed. Mr. Haque, as Mr. Dua was raised the question of agriculture and how agriculture has done reasonably well in this particular quarter, the quarter ending September 30th, of course. But when we saw the monsoons, everyone said, "Oh, the monsoons are fantastic this time around. Agriculture is going to grow tremendously." The prospects were very good as far as agriculture is concerned. Looking at those prospects and looking at these figures now today, are you happy?
I think so. Now things are not going to be as bad as some of the people are saying, for 2 reasons. One thing is that we had a bumper crop in the Kharif season. In the Rabi season also, the spillover will be good in the sense we have very good soil moisture all over the country. In almost all parts of the country, we have good soil moisture, and also irrigation facilities has improved. Investment in irrigation has improved over the past 2 years. So all these things will contribute to significant improvement in agricultural productivity even in the Rabi season. I mean, we should not see just quarter to quarter kind of growth for agriculture particularly. We should not see it that way. This is one. Second thing is that even though there was some apprehension that farmers probably will not be able to access seeds, fertilizers and other inputs because of cash crunch, I think the government has tried to address this issue on 2 accounts. One thing is that at the first step, what it has done, that it has said that all the public sector companies which supply seeds, including the ICR and agriculture universities, they will provide seed to the farmers on credit. This is one. And secondly, even for fertilizers, the fertilizer companies, particularly IFCO and several other companies, they have been instructed to go ahead with supply of fertilizers on credit. So both these input accounts and also the monsoon kind of favorable impact, I think this is going to have a bumper year from the point of view of agriculture production. And if there are some constraints in some places.
Are you saying that demonetization is not going to have any impact at all on the Rabi prospects?
I think so. I think so, and because there are signs like that. Except I can tell you, this is going to be good even for future, even for the farmers. Now they will know the value of money. So far they were trying to keep it only with themselves in terms of saving. Now, of course, the government has a role to play, both the central and state governments, to enable them to open bank accounts in several places. If you go to Assam, Bihar, Jharkhand, there are still farmers who do not have bank accounts, a large number of farmers. So in those places, I think the bank facilities and the enabling them to open accounts and then
Indeed. Okay.
dealing with
Fair
this,
enough.
I think this will help.
Point taken. Mr. Dua, you don't agree with that, do you?
No, I'm not at all disagreeing. But all that I want to say is we have to see all the sectors of the economy in 2 or 3 new developments which have taken place, which are consequent to what happened on November 8. One, there is less money supply in the economy, and that's going to impact every sector of the economy, including agriculture.
Indeed.
Second, the black money, so-called, untaxed money, or I'm not calling unaccounted, it was accounted for in some ways, but untaxed money, that is also going to be impacting a lot of expenditure which used to earlier be taking place in cash.
Yes.
The cash economy, the proportion of the whole transaction, cash transactions will come down considerably. Third, I think we need to also look at it from the point of view that the dollar has strengthened, and by all current expectations that the trend is likely to be maintained. It may not be very sizable. The rupee may be going towards its real exchange rate, etc. And finally, I would say that the investment in the country post demonetization is going to be impacted, foreign investment as well as the domestic investment, because consumption has come down and likely to remain that at least in the short run. How agriculture is going to be completely insulated from all these factors, I find it a little difficult to kind of imagine that, all right, the government is making arrangements of various kinds, government credit, fertilizer, seeds, etc. We may or may not have lost time, because, in Punjab, etc., sowing took place in October, so it's full sowing.
Yes.
Haryana comes later, Uttar Pradesh comes even after that. From the northern belt where the Rabi is quite predominant, I believe there are signs of stress clearly in Uttar Pradesh.
Indeed.
On sowing, fertilizers not being available, seeds, etc.
Yeah.
So those kind of things.
Mr. Bhattacharya wants to make a point.
I also can't share the enthusiasm of Mr. Haque for 2 reasons. One is that while it is true that the seed companies, the government-owned seed companies, were asked to supply seeds to the farmers going for sowing in the Rabi season. But the fact of the matter is this, that in the Rabi season, a large chunk of the sowing takes place in the vegetables area. And now there, the seed companies are all in the private sector.
Yes.
So while the wheat sowing has taken place, but the more remunerative crop, which is the vegetables and even some pulses, the seed companies are in the private sector. So our understanding is this, that these private sector seed companies were not covered in this. As a result, the currency notes that could have been used by the farmer for getting seed from the private companies has not happened. So that is one. Number 2, my simple sense is the agriculture share in the total GDP pie is really shrunk.
It's really shrunk, yes.
So with that 16% share, so the impact on the overall GDP will naturally be that much limited.
Indeed. Yeah. So let's take the discussion forward. Ms. Kohli, this particular quarter every year has always seen growth because of obvious reasons, because it's the festive season and this is the time people really come out and spend, and there's always been growth. So in Q3, maybe the numbers will still be good, but will it be the same in Q4?
I don't think that Q3 numbers, that is the October to December quarter, will be unaffected by this event, which is demonetization, because let's just consider the data which has we have to look at leading indicators, because the GDP numbers always come with a lag. So today we have the first set of leading indicators, which is the Manufacturing Purchasing Managers Index. And that shows a steep drop in November.
Yes.
I mean, there is a fall of more than 2 points from October to November. It's a monthly index. And I believe, at least from the press release that Nikkei has put out, that the firms that they surveyed, most of them said that they expect a further disruption, because let us not forget that November is only 20 days, which shows the effect of a drop or in consumption via different disruptions in various supply chains on the production and on the sales and the marketing side. So we would expect the same to carry forward in December as well. Now, if going back to the Q2 numbers, then it clearly showed that there is just a consumption-driven economy. The base was narrow to start with. And secondly, if you just take away the effect of agriculture, which has been very positive, then actually the numbers show that non-agricultural GDP actually slowed down to about 6.7%. So going ahead, that is going to be affected. Particularly the services component, which showed somewhat good growth, surprisingly good growth in Q2, is likely to be not remaining immune, because let's see that the biggest informal economy and cash-driven sectors tend to be trade, wholesale as well as retail, transport, real estate and construction. So all of these are going to be affected by the currency shortage. So it would be unlikely that we would see the robust momentum continuing in October to December quarter. I would think it's quite unlikely. And as we can see from the various revisions to forecasts that are abounding amongst the private sector analysts now,
some economists say that there will be negative growth in the next 2 quarters.
So the range is very wide.
Would you agree with that assessment?
Well, I mean, I think the range is very wide, because it ranges from minimum, 40 basis points shaving off to as much as a 3.5 percentage point drop. The first set of official estimates, if we can call it that, will be from the Reserve Bank on December 7, when they come out with their monetary policy review. So we will get a sense of where what their estimates are. I also think that these leading indicators, because starting with the PMI today, which will be followed by all the passenger vehicles and commercial vehicle sales numbers, other high frequency indicators like freight, movement, cement, steel, sectoral data, and also the one more set of numbers comes out, R.I.P, etc.
Yes.
But before the monetary policy review, in the first 1 week itself, we'll get a sense of where things stand. My sense is that I think the 40 to 50 basis point downward, trimming of GDP projections is perhaps likely to be reviewed. If we look at the drop in the early signals that we're getting from the automotive sector, for example, shows that sales pretty much came to a standstill.
RTO registrations are at a very, dropped tremendously, yes.
That's got a reason.
And not just that, the two-wheeler sales, which were driven by a very good monsoon, that came to a complete ground to a halt, because much of it, 90% or more, tend to take place in cash. So these numbers will be visible in that, and I would expect that combined with the RBI estimates next week, we should be able to get a sense of where things stand for the rest half of the year.
Mr. Dua, is India still a bright spot?
Yes, comparatively.
Okay.
We will probably continue to be that for a good measure. But we have to be concerned about the impact of the recent events on 3 or 4 sectors of the economy. And the one which comes to my mind, and where Fitch has already put its kind of finger today, it says the real estate construction industry will slow down by 20 to 30%.
Yes.
Both in terms of because it's got a huge inventory beforehand, prices are going to be falling, and there wouldn't be any new further investments. That's one. Second, the automobile sector, which was a bright spot in the Indian industrial scenario, though I believe Maruti's figures, you will see tomorrow. I was talking a little while ago to the chairman at some meeting. He said, look, we've had a 18% increase this quarter, because we just had a meeting yesterday. But that was an exception. He himself conceded, because he said we had a lot of inventory. We were able to offload it immediately, but others may or may not. On the whole, the two-wheeler industry certainly had a huge component of cash. Four-wheelers were probably much more paid for by in the formal manner,
Yes.
but not necessarily. And our growth rates have been much higher in the two-wheeler industry. Third, I would say our services sector has been impacted much more than we are willing to concede at this point of time. Services is, with 55%, 56% of the GDP coming from there. The transportation sector has been hit very badly
Yes.
because there is no offtake, no demand from the industry for raw materials. If there is a demand, they don't have the money to pay the transporter, and it passes
Indeed,
down.
indeed, indeed.
And on the whole, I think the investment, what we've been wanting to spur, and which Mr. Bhattacharya referred to right in the beginning, both of the government as well as the private sector, is going to be impacted. As we must just remember that in the manufacturing industry sector, most highest recorded capacity utilization, brightest figures was 75%. Saying 25%, there was still afloat there.
Yes.
And with this reduced demand, I think we're going to see, we'll be probably back to 60 to 65%. And that should be cause for concern. Bright, yes, overall, because others are doing probably worse than us,
Yeah.
but not for too long unless we take specific measures to address each one of this. And I go back to emphasizing real estate because it's got
Mr.
huge
Bhattacharya,
linkages.
taking off from what he's saying, 6.5 to 7.5 growth seems to be like the new normal. Can we aspire to go beyond that figure?
Well, of course, we should aspire to go beyond that figure, but the ground reality is telling you something else. You have to keep in mind that an exercise of the kind that was undertaken through this demonetization, the economy to to escape the impact of that is something is impossible. So the economy will have to take some hit. There will be new gainers also. There are new gainers already. You have got the electronic wallet companies. I think they are going to come up with great numbers this quarter. But there are a small segment, but then the large part of the economy has taken a hit.
Yeah.
Consumer spending has taken a hit. And my sense is that while as Mr. Dua was saying, that the largest car company may have shown higher sales because of the inventory being cleared, but my sense is that the other car companies, and particularly the two-wheeler companies, will not be able to come up with
Indeed.
the kind of numbers that inspire confidence. So on the whole, the GDP is a number that represents the overall the level of economic activity in the economy, and it cannot but reflect the lack of demand, the lack of investment, and the kind of the shocks that were generated by demonetization.
Indeed. Lack of demand is a major concern, Mr. Haque. How you wanted to make a point? Yeah, go ahead.
I personally feel that we are reading too much in the effect of demonetization, although I'm sure this is going to be a very temporary kind of effect. But in the long run in this sense, not 2 years, 3 years, even overall growth if you take, I think this will be quite normal or above normal. And in agriculture sector, again I reiterate, there will be bumper production in the Rabi season. Overall agricultural output growth would be higher as compared to not only last year. Last year was bad. Even before that it was bad. But even otherwise over the 2013-14 kind of level. So I think we need not worry so much on this. Why I am saying this, even in the industrial sector, after some time you will find because of this increased deposits with the banks, the rate of interest will come down. And that lower rate of interest itself will attract a lot of investment by all those who, after all, some disturbance is there temporarily. People will readjust, and then try to see how things, because they have to go on, and they will go on. They know how to manage risk, they know how to temporarily cope with the situations, and we need not read actually too much on that account.
Indeed. Okay. I've got 2 minutes on the program, so I'm going to get closing comments from all my guests, starting with you, Mr. Dua.
I think what Mr. Haque says about agriculture might be true, that we may have a good crop, etc. But the fact of the matter is deposits by themselves, what have gone to the bank, are not necessarily going to be leading to higher investments or lower interest rates. Already through the incremental CRR, cash reserve ratio of 100%, the RBI has mopped that out. Liquidity is being taken out.
Yes.
The investment will be more if there is effective demand more, and then that room which we have, unused capacity, the capacity utilization is going to be enhancing, not decreasing, and investment won't take place even if by 50 basis points Reserve Bank on the 9th were to reduce the rates.
Indeed. Mr. Bhattacharya, yeah.
Since you wanted me to brief, the short-term impact will be bad, and the long-term impact we still don't know. But there is no doubt that in the third quarter and even spilling over to the final quarter, my sense is the GDP will be impacted, and clearly the goal of 7.75% growth for the current year, which is what the government had stated at the start of the year, probably will be a very, very difficult goal.
Indeed. Mr. Haque, your final comments? Your
Yeah,
final
I think
observation.
I again will just add that the way a lot of infrastructure projects are coming up in almost all parts of the country, I can say for sure, because I am also chairing one of the committees of the Environment Ministry to look into these things, to clear projects, both infrastructure projects and also a lot of industrial estates. Not only Gujarat, Karnataka, Tamil Nadu, Andhra Pradesh. I think I can see a very bright future for this country, at least after 3-4 years, when this kind of thing impacts.
Okay,
so I
fine.
think you need not worry.
Okay, need not worry. Ms. Kohli, your final comments. Do we need to worry or not?
Two things I just want to focus upon. The capacity of the private sector and the banking sector to withstand this kind of strain which is induced. At the end of the day, it's a cash crunch, and we have existing vulnerabilities in the balance sheets of both the large firms, large parts of the corporate sector, as well as the banking system. So I have doubts as to what the process of recovery can be, because when balance sheets are already weak, then a cash crunch like that can be doubly hard a blow. The second thing I want to focus upon is the gross value added in agriculture. A lot of it, the component that is added by vegetables and livestock and fisheries over the years has gone up far more. It exceeds that in cereals. So to the extent there have been some kind of reports of output losses, vegetables being very perishable and the prices have been depressed, and there are reports of some kind of losses. So these are permanent loss in output. And even though agriculture has a shorter crop cycle of about 2 to 3 months, and the supply response will be forthcoming, but at the same time, this is a permanent loss, and that may impact gross value added in agriculture.
All right, fine. On that note, we'll have to call it a wrap on this edition of The Big Picture. I'd like to thank all my guests, Renu Kohli, Ajay Dua, A.K. Bhattacharya and Tajamul Haque. Thank you so much for being with me on this edition of The Big Picture and putting things into perspective for us. That's all the time we have. Thank you so much for watching.